Golden rules of spread betting, stops, and money management. Use money management techniques. The most obvious technique is to cut a loss quickly. Too often traders fall in love with a position and persist in holding on to it as the market progressively moves against them. Professionals let profits run and cut losing positions ruthlessly. Amateurs do the opposite. Your bet sizes should be determined by the size of your trading account. Now, a formula we often use is to multiply your capital, say £12,000, by 0.03% and then round up. That gives you the approximate bet size for your account. In this case, the calculation comes to 3.6, so your average bet size should be £4. This is only a general guide, and we would also take into account the volatility of the market that we are looking to trade. The lower the volatility, the higher the bet size we would adopt. Now, a very common mistake is for a newcomer with only, say, a £3,000 spread betting account to bet too big on a volatile market. For example, a £5 a point bet on the Dow that goes against you 200 points in a day will have wiped out a third of this account. In any case, such a bet may have required 2,500 on the account to just open the bet if the NTR is 500, dependent upon your spread betting company. Always use stops. Anybody who tells you not to worry about risk control by advocating the non-utilization of stops is thinking like an investor and not a trader. In effect, they are recommending that you put your capital at unlimited risk. This doesn't make any sense to us, but that is exactly what buy and hold investors do all the time. The proper use of stops will protect profits and limit your losses. When you enter a trade, you place a stop to limit the loss if the trade goes against you. When the trade becomes profitable, it is important that you use stops to lock in profit. Have the right attitude to losses. We were told very early that you learn only how to win after you lose. Now think about that carefully. These are very wise words. How one handles loss is what distinguishes the professional from the trader. Many people begin trading focused only on the potential profits. While nobody relishes it, losing is just part of the cost of doing this business. In effect, you should treat it as an overhead and not get too worked up about it. No one wins 100% of the time. Be patient. Making money safely takes time. Remember, not every day is a trading day. Only trade when your method of screening tells you to trade, and that would normally mean that you enter the markets when the stock, index, sector, or whatever is trending in a definite direction. Only trade when the probabilities are in your favor. For more information, visit www.spread-betting.com.